Welcome, ladies and gentlemen, to Commodity TV and the Precious Metal Summit here in Zurich. And it's my honor and pleasure now to talk to Scott Melbye, the Executive Vice President of Uranium Energy Corporation. Scott, welcome. Great to see you again.
Johan, it's always great to see you and be here in Switzerland. So.
Yeah, thanks for taking the time. I'm a shareholder in Uranium Energy. Actually, I think it's one of my, or the largest position in my portfolio. As you know, I'm a uranium bull through and through, totally. And we have spoken a lot of times about uranium, and finally our dream starts to come true, I would say.
It's nice when if you went back and looked at all our interviews, a lot of the stuff that we talked about actually came true. It is very gratifying to meet with shareholders, whether they're institutional or retail, and just see a lot of happy uranium investors in general, and specifically with what UEC has been doing and what we intend to do going forward.
Yeah, definitely. I mean, Uranium Energy, I think most of the people know your company. You are 18 years now around. And first of all, congratulations. You just brought out, I think it was like 25 minutes ago or something, about the titanium project. My goodness, what a valuation.
Yeah. So, as you know, we are all uranium all the time, and that will not change. We love the uranium industry, and we have intentions to really become mid to large cap, large major global uranium producer. But we did have this Paraguay titanium project that we were able to acquire from David Lowell for around $2 million, which, is now turned out to be one of the largest undeveloped titanium deposits in the world, with very shallow, easy, simple mining, has high ESG scores with hydroelectric power, access to ports and markets. So what we've been undertaking over the last year and a half or close to 2 years is this economic study to really get our arms around what is it worth? What is this project worth in the titanium industry? And we found that in the announcement today that in a base case, this is a 400 million NPV project going to 1.5 billion in certain scenarios. So I think it's safe to say that none of that appears in our current valuation or our market cap. So the next step for us is to monetize that. We want to begin a process very shortly to bring in buyers, whether they be on the consumer or the producer side of the titanium business. I don't think they can afford not to be involved in it. It's that major global asset in that industry. So look to bring value for UEC's uranium shareholders and fortify our already strong balance sheet with more cash that we can devote into our uranium activities.
Super. As I'm a shareholder in UEC, so for me it's also of real high interest. So what would that mean? And we are talking now only hypothetically, please. Yeah. So no forward-looking statement for sure. Just let's do some, let's call it brainstorming if you want. Like with that NPV and that range, what could that mean for a UEC investor? Let's stay conservative.
We'll find out in a process.
Yeah, I know.
But someone will pay for it, but. A base case value of 400 million, all the way to 1.5 billion. We'll have to see what the market thinks it's worth. But again, it comes as a good time. I mean, we've made such contrarian bets throughout the history of the company where we've prepared not one but two production centers in two states in the U.S., Texas and Wyoming, which are now ready to begin production. We've been quite vocal that with uranium prices at 60 or higher for 3 months, we'll make a decision to move forward in Wyoming. We're about 2 months into that period. So by the end of the year, early January, look for us to make a decision. We've been spending most of this year prepping the well fields for restart. We've tested valves, pumps, control systems, flow rates. We're now hiring wellfield technicians, plant operators to be able to start up as early as, I would say, June, July of next year. But that decision, should come here within the next month or two. We've also made big investments in Canada, in the Athabasca Basin, where the Rough Rider acquisition for $140 million from Rio Tinto can kind of provide a core asset along with our acquisitions at UEX, which give us Christie Lake, Horseshoe Raven, sort of a core critical mass, no pun intended, of uranium assets in the eastern Athabasca Basin that we are also engaged in an economic study to determine what's the value, what is the production rates, what's the cost of production, what are the milling options, and make decisions about Saskatchewan. But immediate cash flow production from Texas and Wyoming, longer term production from Canada, from Saskatchewan, all with the goal to become, a 5 to 10 million pound a year producer within, 6 years, 5 to 6 years. We could be up to the 5 to 6 million pound level in the U.S. and then topping 10 million with Canada. Obviously, the development there's probably 6 to 7 year time frame.
And I could imagine at quite competitive production costs.
Yeah, in the U.S., we're very fortunate to have low cost ISR. It's low capital cost, low operating cost, but all in, even with adjustment for inflation recently, we're all in cost at $40. And remember, we're unhedged. So all of our production will be sold at the market price. We're not interested in hedging the utilities upside price exposure. We're interested in getting you, the shareholder, the highest price we possibly can for that uranium. So perfect set of circumstances with the market participating, all of our ducks in a row in Texas and Wyoming, and developing that pipeline in Saskatchewan.
Fantastic. And as far as I know, there is no real money additionally needed.
No,
the permitting is there. Everything is fine.
Yeah.
Of course, for Canada, that's another thing.
No,
but let's assume decision is positive. Well, I think it will be positive. Otherwise, it makes no sense.
Yeah.
But and you can produce, let's say, from July, August onwards. Yeah? What do you think you can achieve maybe for this year, and what do you see for 2025, 2026?
Yeah, well, theoretically, if you start up in July of next year, you're going to have a half-year production. But ISR ramps up, so I would look for something under 500,000 pounds for 2024. But then in a full year, steady state production, getting up 1 to 2 million pound rate, we can go higher because of the scalability of ISR. We put more drill rigs in the field. We certainly have the license capacity to go bigger. But think about 1 to 2 million in the early years. There'll be obviously a ramp up to that, but the ability to go higher if we see the market needing more production.
Fantastic. The market needing more production. I think the market is searching for production, honestly. I have the feeling that you really do not find anything by now. And it was quite interesting. Some weeks ago, we were on the road with Amir, and one of the gentlemen said, you know what, when there is a panic, make sure you panic first.
Yeah.
And I found that really interesting, because my feeling is, what are those buyers from the utilities are waiting for?
Yeah, I mean, in their defense, I think they have seen what's happening, and the long-term contracting levels have picked up considerably. I mean, as you know, for 7 or 8 years, we were way below what would be the normal contracting level. That's picked up this year to more normal levels, but a lot of the existing available production is being fully committed. Who doesn't want to have a contract with Cameco? Well, everybody has, and they've all stepped up and contracted with Cameco. So they're getting more committed out through the rest of this decade. And now it requires this next generation of new mines or restart of mines that are critical to balancing the market, because we no longer have a cushion of inventory or secondary supplies. We are a production-driven market again, and now we need 8 to 10 new mines, and we need them quickly between
tomorrow,
now and 2030.
I would say.
Tomorrow.
Yeah,
so
then it's tomorrow,
that's why I think this is
Yeah.
a sustainable market. I think it will has a lot of legs under it. This isn't a flash and crash type thing. It will take many years to not only get those 8 to 10 mines up and running, but remember, now demand is increasing again. So the gap is increasing on the demand side. So by 2040, it's not 8 to 10 new mines. We probably need another 20 mines in the next decade. Yeah, and remember, Kazakhstan doesn't fall in our part of the world. I think with Russia and China really coveting their neighbor relationship there and stepping up and making huge investments, contracts that we really can't count on Kazakhstan. I think we got to look to Canada, the U.S., Australia, and some places in Africa that aren't under Chinese control.
Yeah, definitely. As I know you are extremely well connected in Washington, I want to ask you that question, because my feeling is that the U.S. government is now doing the same thing in uranium, what they have done before in oil. Because first of all, they were a net big importer of oil. Now they are a net exporter.
Yep.
And we both know they need approximately 55 million pounds per year by now to really get that into the country, because there is no real large production in the US. And my feeling is, with all those laws and subsidies and ideas now, $2.2 billion again to buy into strategic uranium reserve and stuff like this, I have the feeling that this is like a big push for the next 5 to 10 years to really make sure, hey, we produce in the US uranium.
No, it's well, there's nothing like a Russian invasion of Ukraine to lay bare how vulnerable we were to Russia. 25% of our enrichment, but 50% of our uranium comes from Kazakhstan, Uzbekistan, and Russia. So there was a need, I think there was a recognition in the Trump administration that we needed to revitalize our uranium industry. In the Biden administration, it's now an urgent need. And the Nuclear Fuel Security Act, which hopefully will pass as part of the NDAA funding, it's in the Senate bill. It's been included now in the House committee. There's the House and Senate groups meet to consolidate into a single bill, but we have no opposition to our issues. The other chaos on Capitol Hill of House leadership battles and government shutdowns and broader budget discussions are the only thing that's held that up. In absence of all that fighting over everything else, we would have passed. But I think there's enough support on both sides of the aisle, both House and Senate, that passes. And once that passes, we've heard from just about everybody on Capitol Hill that they will rapidly move to pass a Russian uranium ban. They just don't want to ban Russian uranium and have the unintended consequence of impacting our own nuclear power plants. But once the Nuclear Fuel Security Act's in place, we expand the strategic uranium reserve to an enriched strategic uranium reserve. We're in a good place, and we were independent of Russia before the breakup of the Soviet Union. We can do so again, but we need a little kickstart to make it happen faster.
Yeah, absolutely, and probably also higher price in the uranium. I mean, 75 is nice to have, but I don't see it as an incentive price for a big multi-billion-dollar project to really get it moving. I think it's closer to 90, 100, which makes more sense.
Yeah, right? I mean, we're fortunate. Our mines need $60, but that's kind of the lower end of the competitive scale. Other mines needing big capital, are definitely in the $70, $80, $90 a pound. So we're getting there. But even if we had $100 uranium tomorrow, uranium mines just aren't built at the snap of the finger. It's a long process. We're seeing that in around the world and in places like Africa, where mines are being built, but then they're impacted by political risk and military coups, and places like Niger. So mines in Texas, Wyoming, and Saskatchewan, we've said it, there's no better place to be in reliable, stable jurisdictions. And so we really feel that strategy's really paying off. And again, it's paying off for our shareholders, but now it's time for us to execute. So the next step is produce and cash flow from production, even though we've made significant trading profits in the last year, as you know, off of our purchased uranium.
Definitely. I'm 100% sure you will do that. This is why I'm a long-term shareholder. Last question, which comes up to my mind. I'm following quite close to Microsoft and also Bill Gates, because it's always interesting to see what happens in technology. And my feeling was, with artificial intelligence, on the one hand, this is beautiful for the industry, digitalization, saving money. But I thought by myself, I read somewhere that they are planning like 200, 300 new data centers, server centers, to really get the calculating power, I would call it, into it. But that needs massive amounts of power. And I heard that, Bill Gates wants to do the data center and then the small modular reactor. I mean, if I multiply that with, let's say, even 200, this is unbelievable.
The potential for small modular advanced reactors, utility officials in the U.S. have said they expect to build 90 gigawatts or 300 of those in the next, from 2040 to 2050. Sorry, 2030 to after 2030. The other market that really has been untapped but is huge is process heat, mining applications, petrochemicals, data centers, hydrogen production, desalination of water. And Bill Gates is making a good point, and we're already beginning to see data centers reach out to small modular advanced reactor vendors that want carbon-free energy. They want uninterruptible power. I just had an opportunity to meet with Dow Chemical, who are building 4 X-energy reactors in South Texas, just down the highway from our Burke Hollow project. Why are they doing that? They're being pushed to have carbon-free energy at their petrochemical plant. They can't rely on wind and solar that runs 30% of the time. Chemical plants need to run 24/7. So they're building 4 80-megawatt modules for 150 megawatt core 24/7 demand. So they'll always have 100% power.
Yeah.
And what they don't use will be spun off into the grid, which benefits us because we can buy more carbon-free power of a nuclear nature.
Fantastic.
So this
but
is what's...
They need uranium.
They need uranium. And so it's a good fit, and we are staying very close and maintaining good relationships with the advanced and small modular reactor vendors, because they're coming to the market at a time where uranium is fairly tight, and I think they're going to value strategic relationships going forward.
Absolutely. Super. Scott, that all sounds fantastic. I could talk to you for another hour easily and look forward for tonight because you are also on the panel for the Zurich Invest Night. That's great.
Yeah, good. And, we're the dinner entertainment, so we'll have to live up to the billing.
Absolutely. No, that's all good. Thank you very much. And please go in production, get that started as soon as possible because we need your uranium.
Excellent. Thank you, Jan.
Super. Thank you very much. Yeah, ladies and gentlemen, it was Scott Melbye, the Executive Vice President of Uranium Energy Corporation. And you heard it, uranium, the beautiful shiny metal, and the market conditions also are even more shiny than uranium because supply demand is in a total imbalance and it will stay there for many, many years. And as you heard also from Scott by now, they are ready to start production within the next 4 to 6 weeks. They will do that decision, and hopefully by June, July next year, the first plant goes on. They have Hobson, they have Irigaray, and they really can go up to easily 2 to 4 million pounds within the next 5 to 6, 7 years. And don't forget, then also the Canadian play comes into it. But the most important thing is uranium demand stays high, and the demand is growing because of small modular reactors and all the building of the new reactors. So this is exactly a market case you want to have. This is an investment case, which is wonderful. This is why my largest position is UEC in my portfolio. And we're going to have big fun, honestly. Join us on the right here. $5.85 is just a stock as UEC, but I think my next target is $9.50. This is what my pointed figure chart is telling me. So really have a very close look on uranium and especially UEC. Thanks for watching us, and bye-bye from Zurich today.